Huh. Not quite sure what's wrong with my camera. Give me a minute. We're going to try that again here. There we go. All right. Good morning, everybody. It's Hammer. Today is Tuesday, January 20th, 2026. I, of course, like I said, am Hammer, the founder of Originator Success, Grab and Go Social, and Rate Sensei. Products to help you to protect your pipeline and grow your business in 2026 as originators. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time, broadcasting to you on Facebook and on YouTube. If you're here this morning, say good morning. If you're watching the replay, don't forget, give me a hashtag replay in the comments. If you're here this morning and you enjoy the show, remember, you can get a reminder text that I'm going live each and every weekday morning. Sign up for those texts at hmmr.io/reminder, hmmr.io/reminder, or use this cool QR code over here. This morning, a lot to talk about. Rates jumping, going to be, I say, an average of a quarter point higher in rate today. So much for all that special news we got about buying up some mortgage bonds, and that was driving rates down, made homes affordable for a whopping 6 days. It just, again, anybody that's a big Trump supporter, keep your panties on. We're not going to get to whatever, but got to talk politics today because it's all political. It's today's movements are mainly due to the talk of taking over Greenland or taking control of Greenland. It's funny how I haven't seen anything clear. Then again, I don't follow Trump on Truth Social, so he might be saying something clear there, and I'm not seeing it in mainstream media. I'm more of a mainstream media guy. So we'll let everybody get on this morning, and then we'll dive a little bit deeper. We'll go into it. So again, good morning, all my friends. Colin Jordan, Holly Johnson, Deb Dickinson, Almir Krivdik, right? Even though I don't see your last name on the thing, I think that's it. Rob Wilson, Heidi Grivert, Rob Stewart, Nicole Semrad, Mike Tebow. Good morning. Ron Siegel said today is National Cheese Lovers Day. So while we wait for everybody to get on and we talk about the market, let's start off with a little bit of fun stuff before we get to the ugly stuff. What is your favorite cheese, and what do you like eating it on or with? And it's cheese, so you may have more than one. So since Ron Siegel says today is National Cheese Lovers Day, let me hear my cheese lovers. Get that out there, and we'll let you know. So today's National Cheese Lovers Day. I do love me a sharp cheddar. I'm a big fan of a good pepper jack, but even more Boar's Head makes the jalapeno pepper jack, which is a little hotter. I do enjoy that. I like a little bit of a smoked Gouda. I like a baby Swiss with ham, or a Swiss with ham. Definitely Swiss with ham. I like, come on, we got to give some of the soft cheeses some recognition as well. I love my mozzarella. I like fresh mutz, but I like the processed stuff that's salty, that comes in the big block, the cheap, the stuff that makes my Italian step grandmother roll over, but I still enjoy that stuff. I love cheese, and there's a reason I'm fat. I love this stuff. I love me cheese. Nicole says all of it with wine. Derek, anything but cottage on anything, including people. Oh, that's funny. We're not going to go there. Amy, your favorite is D. I don't know what D is. What kind of cheese that would be? Feta, Parmesan, pepper jack. Zane, are you there this morning, or is it just mom? Mike Tebow, American cheese on a hamburger, extra sharp to eat. Yeah. Yeah, I like American cheese on my sandwiches too. I agree. Havarti in a turkey sandwich, sharp cheddar. Good morning, Allison Foy. Swiss or a good stinky cheese. I'll tell you what, when I was in France, I learned there were cheeses I definitely don't like. I like my American made cheeses. Ron Siegel, my wife makes a great brie wrapped in phyllo dough with a great chutney on top. Dude, no wonder you had to diet so hard. That sounds awesome. Vicky McSweeney, all of it, except for no stinky and no molded. I do like me blue cheese, now that you mentioned molded cheese. I do like blue cheese dressing. Blue cheese is strong, feta. I love those cheeses too. So we have to talk about cheese this morning. Everyone's like, Hammer, you sent me a text and said rates are going up, and now you're sitting here talking about cheese. We're giving everybody a chance to hop on this morning just because there's going to be a lot of people. And cheese is a lot more of a pleasant topic than rates. So, well, let's go ahead and put the cheese on the side. Let's get into the rate stuff. Again, I appreciate all you being here. So we're going to go ahead and get started and get into it. So let me go ahead and we'll remove this. All right. So let me share with you where we're at this morning. Also, I let you down yesterday. Any of my friends that joined me live, I really should have seen this coming a little bit more. And I was kind of slacking yesterday because it was a holiday and the markets are closed. But this morning, mortgage bonds are currently down 26 basis points, as you see, 99.78. And if we zoom in, let's go ahead and zoom in here. We're going to get nice and close for a minute. Just got to refresh this, right? So we'll zoom in for a minute here and I'll share this and show this. So take a look, and what you're going to see is that, here we go. All right. So mortgage-backed securities, come on, get rid of that. There it is. Okay. So mortgage-backed securities, remember this green candlestick right here that you're looking at, this was the Thursday that Trump tweeted, but put his post out on Truth Social that they were going to buy mortgage bonds. Friday, we saw this big giant takeoff. So we went from being down here all the way up here in the course of a couple of days. Last week, that was 2 weeks ago. Last week, things were down and then up and then down. But on Friday, we ended the day on Friday. I talked about in the text alerts on Friday, I said, here, hold on. Let me just pull these up. So it's the only thing on here. Hold on. Let me get rid of this. There you go. So on Friday, I put this stuff on there where I said, we started the day. By the way, I'll throw this on the thing at the bottom in the QR code. Anyone that wants to sign up for our text alerts, these are $7 a month. So you can't beat them. And here's why. So on Friday, we sent out alert at 318. Bonds were slipping now at the worst levels of the day. Lenders may reprice worse, especially ahead of a long weekend. So on Friday, we were suggesting that you lock loans, and not just loans closing near term, but locking more loans. To wrap up on the day, we got even clearer on that topic. Today's losses are not a good sign. Bonds did more than just drift lower. The 10-year yield crossing 4.20 is a red flag. Definitely consider locking loans for protection, especially with the bond market closed on Monday. The boost from the GSE MBS purchase announcement seems to be slipping away. Well, now that is definitely slipped away. It is all gone 100%. No argument anymore about that. If we take a look, hold on. Sorry, it bounced on the screen. Let me move this one over here. It's the auto sizing that changed it. Let me go ahead and move this. I might come back to it, but we'll put that there. So taking a look here, we're going to see a big jump this morning. This is on the 16th. This is Mortgage News Daily, just an average for where rates are, and 6.07. We're going to probably jump higher than we were back in the end of December, but you'll see at least that eighth of a point on average, probably about a quarter point move this morning. Depends on where this stands. 25 basis points. That's actually going to be about an eighth in rate. So it's gotten a little bit better than where it was a little while ago. You could see that right here on mortgage bonds. Let me change the color. See this candlestick? This is today. So you could see that as we go down is bad. That makes us cry, right? So we're going to give that frowny face, that weird frowny face. All right. So we are down quite a bit this morning. And you could see that this is where we were before the Trump announcement. We're below that. So all that improvement that we saw after right here, we went from 620, 619. and then we jumped, we were at 621 even right here. And then the next day we dropped into the low sixes. That was with those announcements. We're going to be back up here and probably a little bit worse. So you're going to see at least an eighth of a point jump in rate today, probably a quarter with a lot of lenders from where we were at. 10-year treasury yield is up towards 4.30. It opened this morning at 4.30. It's dropped down a little bit, 4.28 at the moment, according to this chart here. And all of this that we see, let me make this a little smaller and I'll pull this up so you can see it in the chart form. All right. So here's what you look in what we call a 48-hour chart. So the 48-hour chart shows exactly what happened. Mortgage bonds, we were, coming out with pricing. Things improved a little bit. We ended the day lower on the day. Again, red flags, not something we were good at. This morning, though, here's the big drop that we saw. This immediate drop is due to the whole Greenland situation. And then also it got even worse from there. So traders come in at about 820. That's why you see this big change in everything getting worse right after that. Two things that are really coming into play this morning that are affecting all of this. The first one is all the drama around Greenland. Now, again, we're going to talk politics. We can have a conversation separately about how you feel about Greenland, whether you think it's necessary, whether you agree with Trump, whether you think that this is horrible. I'm going to point out a couple of things, though, just because I think it is kind of relevant in the conversation. Greenland has a population smaller than the city of Asheville here in North Carolina. It's 50,000 people. Now, I know that every person in the world in an equal and wonderful environment, we all get the same rights, but America has 340 million people. Greenland has 50,000 people. Greenland has 1/8% of the population of Ukraine. 1/8% of the population of Ukraine. Just put that in perspective, okay? So what's going on in Greenland, how necessary it is, whatever. The president of the United States and his administration feel that having control of Greenland is necessary. Not going to debate on whether it is or it's not. However, we've got the Davos Economic World Forum going on this week. The timing of this was not an accident. You could say a lot of bad things about Trump. In fact, I do say a lot of bad things about Trump. However, he certainly does know how to work the media, work the system. And, he wrote the book, The Art of the Deal, and he has his negotiating style. And part of what's going on, again, this is important we talk about this because this is what's affecting rates. And we have to really kind of get our head wrapped around where things are going from here and why. So feel free to put your stuff on there. But this is what Ron Siegel is saying is what I want to, is where I want to get to, right? So Ron said, once the market digests what Trump is doing, the Greenland issue will reverse itself. Maybe while POTUS is at Davos this week. If Russia or China were to get aggressive in and around Greenland, the U.S. is forced through NATO to defend Greenland. That could be World War III, the very least of which would be very expensive, both in blood and treasure. Now, again, we don't need to argue about what's going on and why. We're talking about where this is going to go with rates. So right now, we want to be floating. So let me throw that in the bottom of the screen first and foremost. Cautiously float everything till we see how this is playing out. So it is, remember, this is down in the bottom so that we have this, right? It is a holiday weekend. So we came off the holiday weekend. It's the Tuesday after the holiday, and we've had these geopolitical tensions, these geopolitical events. We don't want to lock anything in a panic. We're only down, and let's call it seeing rates jump 1/8 of a point, right? And again, putting us back to where we were over here, 6.21. So we're going to say here's the thing. Those of you that were able to price around 5.99, you're going back up to 6.25 too. So that's why some lenders, I'm going to say they're going to average around a quarter. It's going to look like a quarter point move, I think. But generally, you're going to see 1/8 to a quarter. Rates are, but look at this already. You can see we're seeing a lot of volatility, a lot of down, then some return. So we've got the Greenland thing is the first thing that's going on. Also, take a look at this headline. There's issues with Japan that also this morning are playing into this, and that's why we want to let this play out. All right. So, concern around Japan's fiscal outlook sent yields on the nation's 40-year debt rocketing above 4% in the Asian session, which is our overnight trading session, the most on record. This is a definite thing. And what happens is bonds have a ripple effect. What happens over there is having a role on what's going on with our bonds here. It's weighing on long-term debt around the world, with 30-year bonds also underperforming in Europe. Yields on JGBs have reached levels that make investing in U.S. Treasuries unattractive on a currency hedged basis. This is where it gets complex with other countries buying our bonds. And I'm not going to spend, we're 15 minutes in, so I don't want to go deep on what he's talking about here. But when you have different currencies and currency hedging, all of this it's a part of the reason why other countries hold U.S. Treasuries. So if JGB, which is Japan's bank, yields continue to rise, a rational choice by Japan investors could be to move capital back towards Japan. So we could see more drama about this Treasury slump after Japanese sell-off. So we've got basically two separate things happening this morning, both of which are affecting our world, which is mortgage-backed securities and mortgage rates, and driving our rate sheets worse. All right. Also, again, we want to keep an eye on what's going on with that 10-year Treasury yield and the fact that it's up around 4.30. So I would be cautiously floating. We want to see where things start to play out. I don't disagree with what Ron said about how about this. Ron says, regardless if rates go up or down, rates always overreact up or down. I agree. Now, we saw that overreaction to our benefit here when we were looking at mortgage-backed security announcement and that Fannie and Freddie were going to buy bonds, and that was so great and amazing. Now we're seeing it go the other way. And that's why, remember, a little over a week and a couple of days, we talked about how when we got that Fannie Mae Freddie Mac GSE announcement, it was a good time to lock in those rates because I didn't think it was going to lead to some long-term driving rates down. We didn't know how long that was going to last. Now, we didn't know the next event was going to come, which is geopolitical tension and everything here. But remember, Trump announced this over the weekend as they're going into the Davos Economic Forum. And there is an agenda. I don't know whether his true agenda is for the U.S. to take over Greenland altogether. I don't know if it's just for us to have a tremendous amount of influence and control over Greenland. I don't think that he really cares. And again, we can have a separate conversation about the right or wrong of the situation or how needed it is or all those different things, because it is a complex issue. This is not just a power trip. All right. It's a complex issue. There's a lot at stake here if you dig deeper. I think many of you probably have. And it's still, again, we can have different views on things. I may agree with, again, I know I've got an audience right now of some people believe it's a good idea. Some people believe it's bad. My feelings don't matter. That's why I'm not even sharing them. The point is, we're seeing this whole play out. Most likely over the next week, the next few days, we're not likely to see anything settle down yet. It's still going to be volatile. It's still going to move. I don't think this goes away this afternoon. Okay. So we're going to see some volatility. If it looks like this is going to play out poorly on a longer term, then we may need to lock, even though things have gotten worse, and just take our lumps. Again, taking the lumps is not the worst thing in the world. We had one of those windows. In 2025, I warned everybody, you're going to have windows where rates go down. You need to take action immediately in those windows. You need to have people lined up. That's why we do our weekly rate forecast with consumers, and why we do it through Originator Success. By the way, if you're not an Originator Success member, I'm going to put this on the bottom. Go check out Originator Success. Sign up for a demo. One of the things that we did, I'm going to open up my email because you have to, here's how you need to be telling people what's going on. And they're going to be like, so let's see, forecast. Hold on, I got to make this window bigger so that I can see what I'm typing in here. All right, so here was the mortgage rate forecast for the week This is what we send out for our Originator Success members. It's automatic turnkey, right? For the week of January 19th, rates ended the week slightly worse. Mortgage rates hit their most favorable levels on Monday following news that Fannie and Freddie Mac would buy $200 billion in mortgage bonds to help push rates lower. While rates crept up later in the week, they were still below where they were earlier in January. This week, rates could be volatile. Mortgage rates could remain volatile this week as markets react to the rapidly escalating discussion around a potential U.S. move involving Greenland. Now, again, I had to write this very carefully, not to alienate or use Trump. Trump's very polarizing. So this is going out from our originator. So I was careful here. Ongoing talk of tariffs and possible retaliation is making rate forecasting especially difficult. Geopolitical issues, threats of a new tariffs on European allies resisting a full U.S. takeover of Greenland, and the potential for retaliation could drive bond market volatility and impact mortgage rates this week. We kept it simple. And that's, remember, when you're talking about this with consumers, they're going to have opinions, whether they're pro or against, or be careful. These are politically charged issues. Remember, you're here to get them loans and provide for your family. Just be careful, okay? But as we go through this, again, what we want to be telling consumers is let the dust settle a little bit. Let's get through a little bit of this volatility. Let's see where this goes and take it from there. All right, we want to kind of see where this goes and take it from there. We have not seen, mortgage bonds are not at any like terrible level. Right before Trump's announcement, we were at 99.84. Look where we're at right now, 99.80. We're right there. So we've basically given back all of the gains that we saw here after the Trump announcement about buying mortgage bonds and having his representatives buy mortgage bonds. We're back down in that same range. That's going to give us a little bit of protection for a while. We can argue that we've got technical support with the 50-day moving average, this red line, but the technicals are going to play a bit of a back role for now. We're going to see where this goes. You're going to have market momentum. You're going to have swings. Brandy said, are you saying you write like that, an old school journalist? What a novel idea. Yeah, well, I mean, and that's it. Because remember, this is going out to tens of thousands of consumers and agents on behalf of hundreds of originators. So I'm very careful when I write our stuff that it doesn't have a slant to it, that it isn't going to get my originators in hot water, that it, just the word Trump can trigger people. So you got to be careful with how I write this. Even though you Trump supporters got to be careful, right? So, again, Tim, you say it's just his ego. I think there's a lot more than that. There's not ego. There's of course it's ego when anything with Trump is ego, but there's a lot to it, to the whole Greenland scenario. But the main thing is, how's it going to work out this week? How's it going to affect mortgage rates and pricing? Where are we going to go from here? So Zachary said, if we didn't lock, do we wait? Yes. Especially you're talking about somebody closing in 10 days, you don't have a lot of time to wait. So something like that, you've got to be very, very careful on where we're at. By the way, not to pick on you, Zachary, but I mean, I'm not saying that you always have to listen to me, but for anything that was closing in the last, in January, all of last week, I was telling you guys to lock those loans because we didn't have any real potential to improve. And I didn't know that this was coming, and I'm not pretending like I did, but why not protect it if you don't have clear improvement? So, but if you didn't lock before today, I wouldn't lock today because like what Ron said, regardless if rates go up or down, there's always an overreaction. Markets always overreact. And, right now, Trump is definitely, I agree with Ron, Trump is manipulating the news cycle. Markets are reacting to that. Christy Rezor also agrees, always an overreaction in the markets. So I would not jump to lock anything. Wait and see where we go. Now, if it looks like things are going to be an extended sell-off, if it gets worse, then you have to lock and just take they're going to have to take the higher rate, the bump. But we're not there yet. Like right now, you can see this is good that this is moving up. Up is good when we talk about mortgage-backed securities. So the fact that we hit a bottom and that it's starting to creep up. Now, it's not likely to fix itself today, but let's see where things go the next couple of days. Now, we do have some economic data this week. You got consumer sentiment at the end of the week. You've got PCE data on Thursday. By the way, Ron, I think I said that yesterday. I don't know if they added it to the calendar. I didn't look today, but his calendar was missing a couple of different things that I noticed. We got GDP data coming out on Thursday. So we've got some things that will come into play, but they're going to take definitely a backseat to this. But let's see where the next couple of days go. The argument, the blustering, the back and forth with Europe. The reality is other countries, our European Western allies, they don't want to alienate and come after the United States. We are not only an economic power, we're a political power, and we are, of course, a war power. We have a lot of power. The United States is a superpower. All around it, baby. We are the Captain Marvel of the Marvel universe. We are the one that has all the powers. So they don't want to really go head to head with us. And you're going to see a lot of talk and a lot of threats and a lot of whatever, but there's a goal that's happening here. And we'll see where this plays out. It's probably going to take longer than a week, but I think a lot of the markets will settle in within this week to kind of see where we're at. So, Jeremy said, I've lost my tail floating so many times. Well, and there's times to float. There's times to float. Like now, we want to see where the dust settles, or if we're in a market where things are improving, right? But there's also times to lock for protection. If it looks like things are getting worse, if this starts to get worse, if 10-year treasury yield continues pushing higher, we're at 4.30 is like our cap right now, right? If this were to go up to 4.5, you're talking that mortgage-backed securities are going to get much, much worse, and you're going to see rates jump another quarter point. So if we see a big jump in the 10-year treasury yield, that's a red flag. If we see mortgage bonds continuing to tank, that's a red flag. But when you see this right here, this candlestick, the bottom half is called the tail. This was the lowest point that we were at right here, and it's moved up, and this is where we're at right now. So just keep that in mind. A lot of this was due to the overnight trading. The actual trading today, we're pretty stable. This candle, the body of the candlestick is small, meaning we're actually not moved that much during the day. Most of the move happened in overnight trading, and that was because of the timing of it. James Mahan, love a good jalapeno cheddar or pepper jack. Yeah, I'm a jalapeno guy too. So, Dana Newman, I also had a borrower who wanted to wait. Well, you know what? You can only give them advice, and they've got to make their own call. Nobody did see this coming. But we can spin it. The thing is, for somebody that waited, we just don't want to make it worse. Here's what we have to be careful of. If we get where things are getting worse, we need to lock and let it go. The worst thing that can happen is that people chase rates. Chasing rates is where the real damage happens if things look like they're going to get worse. Right now, you're talking about going from the 6.07 on Friday to back to 621 or 624 today, an eighth to a quarter point in rate, right? If things look like they're going to get worse, don't chase. Don't chase. That's the big thing. Don't chase. But for now, cautiously float. Let's see where the reaction goes. Let's watch the market today. Let's watch the headlines today. Let's see what news is coming out of that economic forum in Davos and kind of play it from there. So that's what I would do if it were me, y'all. I hope this helps. Please let me know in the comments. Remember, if this is your first time here and you'd like to join us, I sent this text out to the full text alert, but I normally don't do that. However, we do send a reminder if you would like to get on the text alerts. This is for just getting a reminder text that I'm going live. The lives are free. I do these every weekday morning. If you would like to jump on these, if you'd like a reminder with the link, hmmr.io/reminder, or use this QR code over here. If you're on your phone right now, take a screenshot, go back to your photos, press and hold. It'll take you to the page where you can go ahead and put in your phone number and get that text. All right. That's if you want a free text reminder for the daily lives. If you want to sign up for our text alert service to get texts like this one, which did try to warn everybody about what was going on Friday, not that we knew that this was happening, but that things were getting worse. And I talked about locking so that somebody didn't get in that situation. We kind of talked about that. That was went out right here, was the alert and the end of day. Where's my All right, right here, right where we talked about locking on those. So you can sign up for those at rateexalerts.com. And if you just want a free daily email where I talk about what's going on with this stuff, you can get that at ratelockadvice.com. So I hope that helps. A lot of free resources. I'm here to help all of you. Appreciate all of you. If you're a text member, you're getting the lock advice anyway. So many of you are text members on today's call. So hope you guys have a fantastic day. I'll see you tomorrow. We'll take you from there. All right, everybody. Bye-bye.